Just to pick up that key concern we were talking about before the break, how cautious are you about the outcome of the elections, or what gets thrown up in terms of a coalition combination? How material do you think it is for the market's life?
You know, I read a great quote from the White Tiger. It says there are three kinds of fevers to worry about in India: cholera fever, typhoid fever, and election fever. And probably election fever is the worst, Mithali. It's hard to say, but the good news is that the Indian democracy and markets are fairly mature. Ultimately, they will be very volatile around the elections, but ultimately markets figures out and keeps moving in the direction that it has to. So yes, there will be a lot of uncertainty 2 weeks before the election and 2 weeks after the election. But for the Indian democracy over a 50-year period and Indian markets over a 30-year period has shown themselves to be very resilient. I mean, this is a good market with a lot of depth in there. So the market will respond to the kind of cues that we get. If you get a third front government in there, I think the market will tend to be weak. If, say, the Congress with BJP seem within eyeshot of having a majority, I think the markets will react positively to that. And I'm thrilled to hear that on the Congress plan, Manmohan Singh saying that he's going to disinvest all PSUs so that Indian public can have ownership of the PSUs. I think that will bring in accountability to the sector and give a great opportunity for Indian investors to buy some great companies at what would be very good valuations.
How are you reading the global situation, Ramesh, since you track that closely? I mean, this whole optimism in the last few weeks has stemmed from there. First, the financial sector, then some bits of positive news came out from the US, and that unleashed a bit of money into emerging markets as well. Do you think it's a durable turnaround that you're beginning to see out there in the West, or it's just a few positive data points which are leading no more than a bear market rally there as well?
We didn't just look back at what happened in the U.S. The day on January 20th when President Obama was inaugurated, the Dow was at 9,000. This is the oldest, most mature, most widely followed market in the history of Western civilization. It was at 9,000. Within the next 6 weeks, it went to 6,400. A 2,500 point knock in the Dow after it had fallen 40%. I mean, it was clearly vastly oversold. The market gave a good 50% retracement. Now, if you look back and say what's going to happen in the future, I don't see any good economic news lasting. There's going to be a jobless recovery taking place. Unemployment is keep going to trending higher. Banks are not going to be in a position to lend. Whether they're banks in India or banks in Western, they're all hoarding the money, putting it into T-bills rather than lending out. There's going to be an economic contraction of activity. This whole model that the Western world has built up in terms of easy credit availability, that everything is priced by markets, I think probably be rechecked. And the first signpost of that will be the G20 summit that's taking place in London in early April. As the WAC suggested, rather than April 2nd, they should have started on April 1st, so it will be in time for All Fools Day. But I think the global economy has enormous challenges, and the easy money policy that we followed for the last 20 years, I think has come to an end. So businesses will have to earn a return on capital, and that takes a very, very tough weaning away process for the end.
What are you doing, Ramesh, right now in the market? I mean, you've always been a long-term investor. You like to pick good businesses at reasonable value. And many non-index large caps or mid caps above $100 million market cap are trading at 10% of their peak value in just about 12 months' time. Is it time to go out hunting, or do you think it will take a very long time for any of these stocks to come back in a meaningful way?
To be honest with you, I have been hunting, but it's been a very disappointing process. I mean, even in this rally, the mid-caps have, virtually not moved at all. And that's because the investing public is not back in there. They have been so burned. It's the trading community, it's the hedge funds, it's the domestic institutions. And they always tend to buy the 50, 100 most liquid stocks. So the B group stocks are, still available, still great companies at great prices. But we are not seeing any, despite this whole 20% rally, the portfolio of mid-cap stocks that you might own have barely budged. But my suggestion is maybe one or two for investors is that eventually a new bull market will start. A lot of the bears also have this feeling that this time is different, that we're going to rewrite the rules of investment, that investing is never going to be the same again. And, I would respectfully tell them to remember that in the stock market, nothing is different. Everything keeps changing all the time, but it comes back to the same principles. Whenever the next bull market starts, it might be years and years away, but these stocks will tend to move before that bull market starts, is you buy unpopularity. And I think the two sectors which I find vastly unpopular this time, I think one is the airline sector, which I think is just, from Warren Buffett down to the clerk in my office, everyone knows not to invest in airline stocks. And clearly the balance sheets are hugely challenged. But, at some price at the bottom of this bear market, Jet was at $120. So implied market cap of about 800 crores, which is ridiculous for an airline that's running 20 years in India. I own a small amount of Jet for disclosure purposes. So I would buy that. Then I would buy airline stocks, oil marketing companies. They're extremely unpopular, but they offer good, solid businesses that in a more uncertain time will rebound. You want to buy things like Novartis, Ingersoll, which are doing buybacks. You can fairly easily predict which companies are going to do this buyback, privatization in the next 1 or 2 years. I think there's some good returns to be made for that. And for the rest, you just have to, grin and bear it. There's nothing that says that you allow 20% return every year in the stock market.
What about commodities in that case, Ramesh? I mean, they've been a large feeder of this rally we've seen up to 3,100. Any thoughts on whether you would want to dip your feet into anything over there now?
The only, in that case, I always wear, yellow glasses. The only commodity I'm actually really bullish upon is gold. I think it will be a fallout and a big gainer based on the global economic environment. And, people tend to think that gold will do well only in an inflation environment. But if you read history, it does well in a deflation environment too, because one of the properties of gold is that it acts as a store of value. And I think given the fact that people have a lot of disrespect for paper currencies, for fiat currencies, for stock markets, I think over periods of time people will shift to gold. It's now in a trading range, consolidating at the higher end of the trading range. At some point it perhaps break out of 1,130, and then a new bull market will start in gold. And if it does start, it's going to be a very vicious bull market.
I know it's always difficult to squeeze things into monthly outlooks or weekly outlooks, Ramesh, but just because of the momentum we had last week, for a lot of people it seemed like this was going to be the big bear market rally where we would conquer 3,100, do a lot more by way of price appreciation. Do you see that as a likely prospect over the next couple of weeks?
I would think so. And I'm basing this purely on sentiment. I think the results really are, markets will be volatile, but the market's not going to go down barely because of a bad set of results. I think just the sheer sentiment that I'm finding in bears, I've never seen, like I told you, they're expecting Armageddon 2 to happen and happen tomorrow. They're dancing on their graves. And I just, the market may eventually get where they're saying it will get, and it probably will get there. I just don't see that happening over the next month. So I think if I was a bear, I would be circumspect about selling. I would not be very aggressive seller at these points. I think sometimes, even in a bear market, you can have a very strong bull market that can extend in duration for a period of time. And my thought process is, after looking at the players and listening to everybody, is that we are in such a phase that the market might actually, be healthy for the next few weeks, months.
Just one last word on real estate, a sector that you've never been in love with, Ramesh. Has enough damage been done for you to reconsider your stance on the sector, or not quite yet?
I think so. I've never been in love with it, only it's just been priced atrociously in the market. I think values are coming down there. Avoid the companies that are leveraged, but I think if you can find within that companies that have good business models, building, housing for at the 20, 30, 40 lakh level, I think there are stocks within that sector. I would certainly be a buyer out there. All I'm saying is that, the bear market doesn't necessarily mean an end of the world, and I think there are great opportunities for stock pickers to buy stocks, to build a portfolio of the future. I don't like to believe anyone who ever says this time is different. In the bull market, they said, well, this time is different. India will never go down. India will decouple completely. Now the bears are saying this in a bear market. I think go back to basics. Do your homework. Find the principles. The principles of investing don't change. If they change, there won't be principles.
Good talking to you, Ramesh, as always. Thanks very much for stopping by today. That's Ramesh Damani with tons of perspective on how to ride this. He says it's a rally, it may still have legs and may surprise you with the levels it may reach, but even so, it would still be in a bear market. That's his view. 3,000